All right. We are live. Happy Friday. What's up, guys? I am nobody special. It is that wonderful time of week. It is Power Hour, the last few minutes of trading to wrap up the week. It has been one heck of a week. A lot going on in the story. I mean, inflation was the big headline this week, the biggest number in decades. Um, the Evergrande story continues to confuse the heck out of us. We still don't know, did they default, didn't they default? It looks like that matter is going to be settled in court. And there's some geopolitical things that are going on around the world right now. And we're going to spend a little bit of time talking about geopolitical risk today. Not that I want to get into politics, all right, because I really don't. I desperately do not want to get into politics, folks. But I think there are events developing, particularly in Eastern Europe right now, that could be so impactful to global energy markets and the inflation story that, I think we'd be remiss if we ignored it. So we're going to spend a little time talking about that today. Again, I will try to keep it right. I see everybody saying hello in the comments. Thank you, guys. Hello, Mike Robin. How is it going? Tom Stencil, Rich Dyer. Hello, everybody. Hello, Gigi. Happy Friday, you guys. There goes Tether. Silver Tank is back. We're going to talk about all that stuff today. But first, I have a very important story I want to cover. The fight for freedom globally takes a turn for the worst. Hold on, let me change this. Here. Because we have just an amazing story coming out of the UK today. And what is going on with my OBS? There we go. Shrink my big fat melon head. Sprinklegate sinks a UK bakery's top seller after topping is found to be illegal. And I saw this story and I thought, oh my God, what treacherous poison must be in these sprinkles? Are they using these sprinkles to smuggle heroin across the borders? What's going on? What is so bad about these sprinkles? I just had to know more that they've banned the sprinkles. Look at this nefarious looking piece of chocolate cake. It must be stopped. Can we stop the madness? Will nobody think of the children? A British bakery has been forced to pull its top-selling cookies from the market after regulators informed the owner that sprinkles are illegal. The U.S.-made sprinkles contain a coloring that's legal for some uses, but not for sprinkling. Clearly no ordinary sprinkles. All right? This story killed me. Rich Myers, owner of the Get Baked Bakery in Leeds, note to self, visit Get Baked in Leeds, disclosed that a recent setback on Facebook where his updates on what he calls Sprinklegate have been defined by frank talk and the occasional heartfelt profanity. He says the decision is a huge deal for his business and also very effing annoying. And this baker refuses to use any lesser sprinkles. Customers often ask for raspberry glazed donut cookies or birthday Bruce, a towering slab of 12-layer chocolate cake. And we have to scroll down. I'm thinking, okay, what could possibly be so bad about these sprinkles that they're banned? Well, it turns out Miles gets these sprinkles from a wholesaler that imports them from the U.S., but the West Yorkshire Trading Standards Agency deemed them illegal because they contain a coloring called erythrosine. Gotta stop that erythrosine, folks. In the U.S., it's labeled as FD&C red dye number 3. The U.S. Food and Drug Administration restricted the uses of red number 3 in 1990, citing studies showing that in high doses, the additive was found to cause cancer in laboratory test animals. The dye is currently allowed in foods in the U.S., but the Center for Science and Public Interest has urged the FDA to revoke its approval. Now, here's what I want to talk about here. On October 1st, a government inspector was sent round to Get Baked, acting on a tip that flummoxed Myers. An informer had apparently raised the alarm about the forbidden sprinkles. And this just killed me. All right, acting on a tip that there's an informer. Who is this secret agent going around bakeries in Leeds who's ratting out these bakers who are using this illicit red dye number 3? These madmen, these mad cookie chefs must be stopped. red dye number 3 everywhere. So, with this madness about red dye number 3, I just thought I would send a shout out to all my good friends over in Leeds, over in the UK. What I have here is a cup of red sprinkles, and I have confirmed these sprinkles do contain the illicit red number 3, that dangerous, treacherous substance. Down the hatch, folks. This is for you folks in the UK. Tastes like freedom. That's right. That is powerful stuff. Red dye number 3. Land of the free because of the brave, baby. I'm going to have to wash that down. That was a lot of sugar. Coincidentally, folks, if I suddenly drop dead on this live stream from some kind of sudden onset of red dye number 3 induced cancer, please do not let Mrs. Special sell my silver for what I told her I paid for it. It's my worst fear. That was delicious. Reading a couple of you guys. A big worldwide problem. Yes, Daniel Grove, very much. Thank you for your sacrifice, says Zeeble Fritz. Yeah, that's what you get from so much taxes. LOL. No, don't do this. Sorry, Daniel. It had to be done. This madness has to stop. All right. Now that we've gotten that out of the way, folks, I want to talk a little bit more seriously now about some of this. My God, I have sprinkles like in every corner of my mouth right now. I'm going to try to talk. I'm sorry, folks. What's going on in Russia, and I say what's going on in Russia, really what's going on in Eastern Europe. We've got 4 countries involved here. 4 countries that could really send things spiraling out of control. First, you've got tensions between Belarus and Poland. All right, and this tension between Belarus and Poland stems from the flow of Middle Eastern immigrants that, I guess as the story goes, Belarus has been kind of funneling them towards the Polish border. And they're kind of fighting back and forth over, are they going to be allowed in Poland or not? The Belarusians are kind of forcing them in there. They're stuck right along this border. They've got troops on both sides of them. All right, it is getting cold over there now. So what you have is this humanitarian crisis that's emerging, right? Now, Poland says what's going on is Belarus is really just acting as a puppet for Vladimir Putin, and that they're using these people as human instruments to sow division in Europe, to cause havoc in Europe and to destabilize these Eastern European countries. And knowing what we know about Vladimir Putin, he is about the scariest dude alive. I mean, I've been saying this since the early 2000s. Few people in the world scare me like Vladimir Putin. I think he is just not a man to be trifled with. All right, when he speaks, he does not make idle threats. He has invaded 2 of his neighbors. He has poisoned brazenly and murdered anyone who speaks out against him in Russia. So this guy is not to be taken lightly, okay? And when he's making threats, you damn well better pay attention because he backs them up. So you've got this Poland-Belarus conflict brewing here, okay? Now, here's some things that make this a potentially global issue. First of all, Poland is a NATO member state, all right? And the NATO charter says an attack against one is an attack against all. And if a NATO member country is attacked, all NATO member states are required to come to its aid. That means the U.S., that means the UK, France, Germany, right? That means a whole lot of countries. Belarus is part of, I can't remember, it's the CSTO, I forget what it stands for, but Belarus has a treaty with the Russian Federation. An attack against Belarus is an attack against Russia. And Russia and Belarus have recently been holding military drills together. Okay, so if this situation between Belarus and Poland were to light off, if it were to become a shooting war, it could very easily escalate into a conflict involving dozens of countries. Okay, that's one thing that's going on. On top of that, you've got Russian buildup of troops along the Ukrainian border. Now, keep in mind, Russia annexed, i.e. they invaded the Crimean Peninsula and just took it from the Ukraine. This is going back about 8-10 years now. And I mentioned that Russia had these military exercises with Belarus. Well, it looks like what this may have been, this exercise with Belarus, was really just a cover story because Russia moved all of these troops, about 90,000 of them participated in this exercise with Belarus, but they didn't leave. Actually, instead of going home, they went right to the Ukrainian border. So it looks like Putin may have used this exercise with Belarus to at least quietly build up 90,000 troops along the Ukrainian border. And Putin wants Belarus, and he wants the Ukraine, and he wants the Baltic states back. Okay, now real quick, I'm just going to bring up a map of Eastern Europe. And I guess I know a lot of you guys, some of you folks are from Europe. This may seem a little review to you, but for the folks in the States, all right, here's the Russian Federation. Here's the Crimean Peninsula that Russia invaded a few years ago. Here's the Ukraine, which Russia wants back badly. You've got 90,000 troops stationed along this border right now. Here's Belarus, and here's the Belarus and Poland border where this migrant crisis is playing out. And if this thing lights off in Poland, you're going to see Russian troops rolling across Belarus, which Putin would like nothing more than an excuse to send his army into Belarus and then never leave. And if the Russians pour into Belarus, then it makes perfect sense that all those 90,000 troops stationed along the Ukraine, they would come pouring in. Okay? And then that leaves Estonia, Latvia, and Lithuania, also NATO member countries, almost surrounded by Russian-controlled territory. All right? Now, the other thing I want to point out is a lot of this natural gas that right now Western Europe desperately needs natural gas. A lot of it flows through Belarus and through the Ukraine. All right? And in the middle of this energy crisis right now that Europe is being smothered by, energy prices are ridiculously high in Europe right now. If this situation were to light off here, it's conceivable that Russia would shut off the flow of gas through Belarus and through the Ukraine and leave Europe to shiver in the wintertime. They may use that as a political weapon to keep the rest of Europe out of any kind of a conflict. And also keep in mind, you've got this Nord Stream pipeline that the Russians built that allows them to circumnavigate all of these Eastern European countries and still sell some of the gas to Germany, to France, to the UK. So they can shut off the flow through Belarus and Ukraine, but they still have leverage over some of the more powerful European countries if they do that. Now, the other thing you want to think about, if you're the United States, right? Again, I'm not trying to get too political here. I'm just trying to convey the situation as it is right now. Joe Biden's poll numbers are struggling right now, and it has a lot to do with energy costs and the inflation story. If Putin throws this tantrum, if this kicks off in Eastern Europe, and Putin starts playing games with the flow of gas, it's going to cause European gas prices to skyrocket. And the Europeans' alternative for natural gas will be the LNG market. And a lot of LNG comes from the U.S. now. And if Europe starts gobbling up LNG on the open market to try to offset the flow of gas from the European pipelines, it's going to drive up natural gas prices here in the States also. And that's not going to be good. That's going to be terrible. Absolutely terrible for this inflation story going on in the U.S. because we get most of our power from natural gas here in the States now. So this situation going on with Ukraine, Poland, Belarus, and Russia could very easily escalate, number one, into a global armed conflict, and number two, could cause energy shortages, could increase the inflation story. I mean, really, this could cause a lot of havoc. All right, so I'm not trying to get too political here. I'm just trying to communicate the situation that is going on. And you know, here's a couple of stories I want to point out why Belarus's pipeline threats could mean even higher gas prices. The role of the Yamal Europe pipeline in Europe's gas supply gives Minsk powerful means of retaliating against the EU. Pipeline is owned by Russia's state gas company Gazprom and measures more than 2,600 miles. It brings Russian gas from the giant gas fields of the Yamal Peninsula in western Siberia to Poland, Germany via Belarus. Pipeline does not directly lead to other European countries, but it helps to feed Germany's huge gas storage facilities, which are used by energy companies and traders across the continent. Russia remains Europe's biggest supplier of gas. About one-fifth of the supplies traveled through Belarus last year, mainly through the Yamal pipeline, making it an important conduit for European gas imports and for Russia's gas revenues. The threat by Belarusian President Alexander Lukashenko to cut deliveries of gas to Europe via the pipeline in retaliation against any new EU sanctions would be a major concern for European energy companies on top of the looming winter gas crisis. All right, so keep in mind, we are looking at some majorly expensive energy bills already this winter. All right, we got the CPI read earlier this week. The energy index in the U.S. was up 30% year over year. If this conflict sets off in Eastern Europe, that number is going to get a lot bigger real fast. So it's important to keep that in mind. And again, it's not just the Belarusian story. Here is the story about the Russian troops. There are now 90,000 near the Ukraine border after the drills, Kiev says. Russia has left military units near the Ukrainian border after exercises, with the number of Russian troops in the area now totaling 90,000, the Ukrainian Defense Ministry said. Russian armed forces recently held a series of large-scale drills, including with airborne troops, the ministry said late on Tuesday. After the training, units of the 41st Army stayed behind, about 260 kilometers or 160 miles from the Ukrainian border, it said. It should be noted that the Russian Federation periodically resorted to the practice of transferring and accumulating military units in order to maintain tensions in the region and political pressure on neighboring states. All right, so again, what's going on in Europe right now, this is very serious. This could result in the NATO charter getting invoked. Again, Poland is a NATO member country. Estonia, Latvia, Lithuania, those are NATO member countries. And Russia's goals have always been the reunification with the Ukraine, with Belarus, and with those Baltic states. So this situation needs to be watched. And by the way, if things light off in Eastern Europe, you never know. China may take advantage of what they view as a distraction, or they may press their luck with Taiwan at the same time. So this could really escalate, folks. This warrants more attention. So we're going to keep an eye on this situation. Anyways, I'm not trying to beat the war drums or anything like that. I just think we should all do business. I don't see any reason for all of this. I mean, this is powerful people feeding their egos, causing problems. Putin is a holdover from the Cold War who wants the Soviet Union back. Enough of that garbage. Like, we have enough problems without this crap. But this is out there, folks, and you need to keep an eye on it. Also, I've mentioned in some past streams, ticker symbol LNG. Again, not to be like a war profiteer. Let me bring that up real quick. But if this situation were to light off in Eastern Europe, I think one of the biggest beneficiaries would be a company like LNG Cheniere Energy. They are the largest U.S. liquefied natural gas producer. They own facilities in Corpus Christi, Texas, and Sabine Pass, Louisiana, where they liquefy the cheap U.S. natural gas, and then they sail it across the pond. They sell it into Europe and into Asia. They have done very well this year on the back of this energy crisis. And just looking at this chart technically right now, I'm going to draw a couple of lines right here. Let's put one down here. Move that up a little bit. There's some base support. We're right about at that support level. Let's put another one down here, maybe lower that a little bit. So we're kind of in this little flag pattern right now, and we're right around the support level. So I could very easily see this one. Where did my pencil go here? I could very easily see this one do some bouncing around in here. Certainly, we're going to bounce off this level down here. But if we break out of this channel, we are going up and to the right. So I'm keeping an eye. I already own this one. I've owned it for a long time. I haven't added to my position yet, although looking at this chart right now, if we get a bounce off of this lower line, it's not a bad place to add for a swing trade. But again, I'm still in cash raising mode. Just something I thought I would point out. Anyways, let's go to some of your comments here. Now let's see the one chip challenge. That's interesting, Daniel, Rich Dyer. I'm not sure what you mean by one chip challenge. Was that a reference to my cup full of full of red dye number 3. These guys in these countries are just attention WHs. Yes, they are, Mike Robin. As Europe goes more nuclear in power, gets less dependent from them, isn't a good outlook for these economies. Mike, I'm not sure Europe is going more nuclear, to be honest with you. I think there's been some bickering back and forth in Copenhagen. Um, they wanted to label nuclear as a green energy, so it qualifies for some of these subsidies. Deals with European law that I don't really know that much about, but I know a lot of countries block that. They do not want nuclear to be labeled as a green technology. They want only wind and solar to be labeled as a green technology. My personal opinion, nuclear is as green as it goes. My opinion, again, I work in nuclear power, so I'm biased, but I think nuclear is safe. I think it's clean, and it is certainly the most reliable form of energy that there is. And if we're ever going to get off of fossil fuels, we can't possibly do it without nuclear. That being said, the political headwinds in nuclear are just so ridiculous, and I don't see that changing anytime soon. I'd love to see it change. It's one of the reasons why I haven't really gotten behind the uranium trade that a lot of people in this circle have kind of been pushing for. And to my detriment, uranium has done fantastic this year. But the headwinds for nuclear, the political headwinds, just didn't really. They've kept me out. Put it that way. But I'd love to see more nuclear rolled out in Europe. At least Putin didn't commit genocide like some of the Western leaders. I'm not sure Putin didn't commit genocide. Be honest with you. Again, Putin has invaded 2 of his neighbors in the last, 12, 13 years? I mean, one of them, he invaded Georgia during the Olympics, like right as the Olympics were starting. And, correct me if I'm wrong, but isn't the whole point of the Olympics supposed to be a symbolic gesture between countries of peaceful competition? Isn't that where the Olympics came from? Isn't that why all the original Olympic events were military in nature? It was a way for the Greek city-states to compete with each other without getting violent. So to invade your neighbor during the Olympics is a very big deal. That is a big middle finger to the whole world. So I wouldn't be singing Putin's praises, not in the least bit. He is a scary dude. Also, he poisons reporters who ask inconvenient questions. He poisons them with radiation, with radioisotopes, so they die horrible deaths. I mean, this guy is not to be trifled with. Zeeble Fritz, man, this is the best news channel. I would have never heard this stuff otherwise. Z, I'm kind of curious. This has been getting a little bit of attention in the press, but not much. It's really not getting the attention that it deserves for whatever reason. I think that this story could be big, and both the Russia-Ukraine story and the Belarus-Poland story, I think they're related. I see Putin behind both of those stories. So, and now, Vladimir Putin is not a man who wastes leverage. And with the energy situation in the world right now, and with Putin holding most of the cards in that category, I can see him pressing the advantage. Putin is not the kind of guy to let an advantage go to waste. And right now, he has got Europe by the cojones. And if he squeezes, Europe freezes. Oh my God, that rhymed. I did not do that on purpose. That was an accident. Please don't crucify me. That was such an awful pun, joke, whatever. I just totally lost my place. But I would not be surprised to see Putin start playing games this winter with the flow of gas to Europe, or to press the military advantage and then use the threat of natural gas to keep Western Europe from doing anything about it. Canada can ship them all the natural gas they need. Al Jazeera is a good source of news as well. I am not crazy about Al Jazeera, to be honest with you. I'm not crazy about a lot of news outlets. Canada can ship a lot of natural gas, but again, you need the liquefaction capacity. You need the shipping capacity to get it there. You need the regasification capacity on the other side. I don't know that infrastructure, as much as we're building it out right now, I don't know that infrastructure can really replace the flow of Russian gas right now. I'm not sure it would be that easy. Certainly, gas prices in the Western Hemisphere would skyrocket along with European gas prices if that happened, though, because that would cause such a price crunch. It would really be catastrophic politically and economically for the West. Putin really does have us by the cojones. Looks like a great opportunity to make some deals. LNG trade for Johnny Boy Silver. Your head is in the right place. That's what I'm thinking of. I already own LNG. I'm this close to adding, but I'm still wanting to be in cash raising mode. All right, because I still think we've got a major market correction coming at some point in the next 6 months to a year. I want to have that dry powder when that happens. Also, I did make a trade today. I'll talk about that in a little bit, but it's not entirely unrelated to this. Why is Warren Buffett sitting on, I believe I heard, $178 billion? Do you believe he holds any precious metals? I'm sure Buffett holds at least some precious metals. He's not. He's the kind of guy, he holds at least some of just about everything. I can tell you why Buffett is holding cash. Probably the same reason I'm raising it. He knows that, number one, we're in an asset bubble, and that just about everything, except for precious metals, is overpriced. And so he's holding that. He's keeping that powder dry. He's waiting for the sell-off. He's waiting for the opportunity to buy in cheaper. All right? Buffett has been around. He's been around a few times. He's seen this kind of stuff before. So, hey, dude, Putin is an Eastern Orthodox Christian, so while he might want to annex other countries, I doubt he wants atheistic Soviet-style communism. I don't know enough about Putin's personal beliefs. As far as him wanting Soviet-style communism, I mean, that's where he came up. He was a big shot in the KGB. I mean, maybe he doesn't want the atheism that came along with it, but I think he longs for the good old days of the Soviet Union. To be honest with you, he strikes me as the kind of guy who wants a do-over in the Cold War. I don't know who in their right mind. It's one of the reasons why he scares me. He just seems like he wants a do-over in the Cold War, and that's not good for anyone. My God. Once is enough. Look at Macron's decision this week, Mike. I'm not sure what that's talking about. But to be honest with you, guys like Macron, like Merkel, like Johnson, I mean, I see a lot of these Western European leaders, and they just project such weakness. I mean, you look at these people. If I'm Vladimir Putin, the mere sight of some of these Western European leaders just would drive me to send my tanks into Ukraine overnight. I mean, at some point, not to beat the war drums, but one of the most dangerous things you can ever do with a man like Vladimir Putin is show weakness. It's one of the worst things you could ever do. And the U.S. and Western Europe has shown a lot of weakness recently. And now with the economic situation, with the energy crisis, if I'm Vladimir Putin, I'm not really afraid of a Western response to whatever I do. Let's put it that way. I'm not sure anything scares Putin, but the guy scares me. Few people scare me. Vladimir Putin scares me. Ever since you talked about the U.S. 10-year going over 2%, I've been hiding under my bed. Any further thoughts on this subject? Lynn, let's look at the 10-year because we had some interesting stuff in the bond market today. Thank you for that comment, by the way. That was a good one. Let's bring up the bond market. Here we go. All right, so it is back up pushing around 1.6 because, man, we came down pretty hard over the beginning of November. And I was pretty surprised to see that sudden drop. Let's move me a little bit out of the way. This is looking at the 10-year chart, the yield. And keep in mind, the yield is inversely related to prices, right? So you see yields rising, that's prices dropping, yields dropping, prices rising. I was really surprised to see this downtrend, to be honest with you. I mean, this kind of coincided with the taper announcement, with the confirmation, maybe a little, I don't know, the news is behind us, so, I don't know. But here's the thing. It came down below this, what is this, the 50-day moving average, and it popped right back above it. All right, so that is a higher low. I think we're going on to higher highs from here. So looking at this chart, I think we're definitely heading back up. Are we going to challenge this high from earlier this year? I don't know. Yeah, I think so. And interestingly enough, there was it's a story I wanted to do a video about this last night, but to be honest with you, my understanding of the bond market kind of falls short sometimes. I don't want to pass myself off as a bond market expert. If you want to learn a lot about the bond market, watch Stephen Van Meter's channel because Stephen Van Meter has forgotten more about bonds than I could ever hope to know. All right, and I recommend that channel. But there was a 30-year bond auction yesterday or 2 days ago, and it was the widest tail that we've ever seen, or the widest tail since 2011, which just means the bond market was demanding a higher yield, right? And the primary dealers ended up going home with about 25 to 30% of the bonds in the auction, which means they didn't find any buyers in the market, and the banks and the financial institutions bought up all the slack. So what the bond market was telling the government was that we want higher interest rates. Actually, this was on Wednesday. This was a few hours after the CPI read, right? So the bond market is telling the Treasury, if you're going to give us 6.2% inflation, then you better tell the Fed to raise our interest rates, because we are not tying up our money for 30 years for no 1.94%. It's not enough. It makes sense. Are you going to make a loan to the government for 30 years for 1.9% when inflation is 6.2%? My God, how much spending power are you losing over the course of that 30-year bond? So the bond market wants higher yields. And look, the taper hasn't even officially started. I don't think they've even officially started yet. And the taper has to be finished before the rates can rise, or before the Fed can raise the rates. So the bond market is already throwing tantrums. The bond market is already saying we're demanding higher interest rates. And it hasn't even started yet. So there may be a lot of pressure for the Fed to act sooner, for them to rush through the taper so we can get more rate hikes. And some of these gambling websites and places where they handicap the likelihood of rate hikes next year, they're starting to price in almost near certainty of 2 rate hikes next year. And there's even people starting to talk about possibility of 3 next year. I think 3 is far-fetched. But folks, rates are going higher. The bond market is demanding it. And there's another $1 trillion that's about to hit the bond market, right? The Build Back Better bill, or this 1.7 trillion, whatever they did. Help yourself to another $1 trillion on your way out the door. But all that money has to be borrowed from the economy, and the bond market wants more interest. So rates are going higher, folks. My personal opinion is somewhere between 2 and 3% on the U.S. 10-year. The market is going to throw a fit. I'm talking at least a 20% correction. Why do I get to that? Because the last time the market threw a fit over rates was December of 2018, and here we were over here. We were just over 3% back then, is when the market threw the fit. Coincidentally, that was the only time ever that I know of that the M2 money supply shrank. And that's when Jay Powell abruptly changed course. He went from hiking rates to lowering them. He went from quantitative easing to from quantitative tightening to quantitative easing very abruptly a few months later. And that happened at 3.2%. And we've got a lot more debt in the United States now than we had in December or November of 2018. I mean, a lot more. So I don't think rates will get this high again before the market freaks out again. I think it'll be a lot lower. So that's why I'm saying somewhere between 2 and 3%, the market's going to throw a fit. When that happens, Powell is going to say, okay, the printing press gets turned back on, and that's when the inflation story really gets going. That's my opinion on that one. All right. So I had mentioned before that I had made a trade recently, and we were talking all about the situation in Europe and how natural gas is playing a big part. Well, I have been talking a lot about fertilizer and about food inflation next year. All right. Now, first of all, here's a chart of natural gas futures. You can see we're right down around support right now, a level we've bounced off of a few times right now. I think natural gas goes higher from here. But I want to point you to this story here. And this is one to watch. Let's get me out of the way. DTN retail fertilizer trends. Okay, this is off Progressive Farmer. Nitrogen fertilizer prices shatter records as anhydrous hits $1,113 per ton. All right, and look at this chart over here on this graph. Let's see if we can zoom in on that a little bit. Yes, give me all your cookies. That's fine. Just leave me alone. I want my chart. Look at that red line. That is your 2021 fertilizer prices. Folks, we've gone parabolic, and it's steepening. This is not getting better. This is only dated a few days ago. All right? And, the green line and the purple line, that's your 2020, your 2019 numbers. Look, I mean, Fertilizer prices have been going up all year, but they have gone absolutely parabolic. This is because of the natural gas prices. This is because of the energy prices. Okay. And the important thing to remember here, this is next year's food getting more expensive, right? Because fertilizer becomes our food next year. This is the stuff we're eating later on. Now, I mean, it's up. It's saying in this article, the average retail price of anhydrous has increased 38% from the last month. And I got to zoom out a little bit more here so I can see what I'm doing. The average retail price of anhydrous set a record at $11.13 per ton after increasing 38% from last month. The 7 other major fertilizers tracked by DTN for the first week of November saw increases ranging from 9% to 36% as supply disruptions push prices to new highs. DTN considers a monthly price change of 5% or more to be significant. You think? Now, I did a video a couple weeks ago, and I mentioned in my live stream last week how I have been watching corn because corn is a very fertilizer-intensive crop. Corn does not extract any nitrogen from the air like soybeans does. So corn needs a lot more fertilizer than soybeans do. And a lot of farmers kind of alternate between corn and soybeans. Well, there's some theories going on that next year a lot more farmers are going to plant soybeans instead of corn in an effort to save on their fertilizer costs. And even those who don't are probably going to use less fertilizer next year because these costs are so high, which means crop yields are probably going down next year. Folks, food prices are going much, much higher. And also factor in farmers use a lot of energy. All those tractors, all that equipment, that has a high fuel cost. Okay, so I think corn is kind of a leveraged way to invest in this trend of fertilizer costs, which is being driven by the natural gas story that I mentioned earlier, right? And keep in mind, if this stuff in Eastern Europe were to set off and they were to play the games with natural gas prices, this fertilizer chart is going to steepen even more. Okay, so as kind of a leverage play on the fertilizer situation, which is also an offshoot of the energy trade, today I finally pulled the trigger and I bought this corn ETF, ticker CORN. Now, I've been following this for a couple of weeks, and I mentioned in my live stream a few weeks ago, let's bring up my pencil here. You know, back then we were around here, and I was mentioning that I wanted to see this thing break above this line, which it did. I wanted to see a retest, which it kind of did, and then move higher before I invested in it. And that's exactly what we've seen happen. So today I bought some January 2023 call options in this corn ETF. I bought at a $22 strike. I paid about $2.65 for each option. So that gives me a break-even price of $24.65 some point between now and January of 2023. And I think corn prices are going significantly higher than that. Again, with fertilizer prices, with energy prices, with everything that's going on, I think this one is a pretty safe bet. I was hesitant to trade the options in this one because this is not a very liquid market for options in this ETF, and the spreads tend to get very big, which means you tend to overpay when you buy them and you tend to get underpriced when you sell them. But I was looking in at buying the shares versus buying the options, and I want to keep as much cash on the side as I can for this market sell-off that I see coming. So I decided to go with the options because it's a more levered play. So we'll keep an eye on that one. Again, I'm not looking to flip this one in a week or anything, but I think this story, we've not heard the last of this, especially considering how fertilizer intensive corn is and how I think the price of corn is. We're going to have a shortage of corn next year. I think we're going to have a lot less gets planted and a lot less is going to grow because they're going to use less fertilizer. And as the energy prices continue to rise, I think this is going to get bigger and bigger. Also, I have to see why my A here, folks. I'm not a financial advice. This is not financial. This is just financial edutainment. I want you to do your own research, your own DD, arrive at a decision that is right for you based on your unique situation. So with that, I want to get back to some of your questions. And Birch Mariner, thank you, sir, very much for the super chat and for supporting the channel, sir. I appreciate that very much. He says, really appreciate your work, Nobody Special Finance. Thank you, sir. I appreciate the kind words, and I appreciate the support for the channel. Okay, my God, there are so many comments today. I love to read the comments. I don't think I'm going to be able to read all of them, so I have to skip by some of the Putin ones. Follow, go on, watch Putin's speech. Van Meter is a shill for the Fed. His analysis is always wrong. Strong words, Nicole. I don't know that he's a shill for the Fed. I tend to disagree with a lot of what Stephen has said. I'll say that. Stephen Van Meter has been calling for deflation all year. We haven't seen that, obviously. We've seen inflation. Now, Stephen Van Meter may end up being right because if the Evergrande collapse happens and if this big sell off in the stock market happens that I think we're due for, those would be very deflationary events. So, Stephen Van Meter may be proven right in the long term. Coincidentally, I would talk about what Economic Ninja calls the dollar Whippet theory, where he says we get inflation, then deflation, and then hyperinflation, which the more time goes on and the more I see things developing, I'm subscribing to that theory very much, where this inflation is going to result in a market panic, and the Evergrande story could contribute to that. And the stock market is going to crash. And when the stock market crashes, the government and the money printers are going to get involved in a knee-jerk reaction, and they're going to print even more currency, and that's going to cause the hyperinflation. So all of these different channels and their theories about what's going on, I kind of see them coalescing and coming together into pretty accurate read on what might be happening. So again, Stephen has been calling for deflation all year. We haven't seen it yet. I don't necessarily agree with that, but at the same time, I have to say Stephen Van Meter's knowledge of the workings of the bond market is vastly superior to my own. So I have to stop short of saying Stephen's wrong because I think I might come back to regret that someday. All right. All right. Let's see what else we got. Rates are not going higher. Interesting. Well, rates have gone lower for the last couple of weeks. I mean, they ticked up a little bit the last few days. They have gone lower. That's interesting. How can the Treasury turn over short-dated Treasuries if rates go up? Interesting. How is the Treasury going to do anything? How are they going to finance all of this borrowing if rates are going up? How are they going to service the existing debt if rates go up? It's an excellent point, Nicole. The short answer is they can't. Okay, so and I saw a video that Steve Penny, the silver chartist, did over with Liberty and Finance Channel yesterday, and he talked about how one way or another the U.S. government, the U.S. Treasury, is going to default. There's two ways they can do it. They can default in the good old-fashioned honest way, and they could just fail to pay their debts because eventually the interest cost on the debt will be more than all of the tax collections bought in the entire year. So that would be an honest, good old-fashioned default. I don't think they'll do that. They'll default the other way. They'll default by hyperinflating the currency, by destroying the value of that debt. So that's what I think is more likely. So, Nicole, when you say, rates aren't going higher, I think they're going to let rates go higher because they know it's going to cause the market to freak out and to panic. And once that panic starts, once stocks start dropping 1,000 points a day, that's when the public is going to start demanding that the government do something, that the Fed do something. And that's when they turn on the money printers big time, permanently, MMT for life, and the dollar is destroyed. So I see what you're saying with rates can't go up. How can they roll over their debt? I do understand that. I think they know that's coming. And I think with the taper and with the rate hikes, they know they're going to cause a panic, and they're just waiting for that panic to start so they can do what they've always wanted to do, and that's inflate away the debt. I hope that makes sense. What's the ticker symbol on the bond chart on Yahoo? Your melon is in the way. I always just go to the top. That's an excellent question. What actually is the ticker for the 10-year on Yahoo? The 10-year is ticker symbol TNX. Stay strong and hold defenses. We will. Okay, well, I think he means long-term deflation. I would love to see long-term deflation, Otis. I think long-term deflation is good for the general public. It's good for everybody prices going down incentivizes responsible behavior. It penalizes irresponsible borrowing. It means people's quality of life goes up. It means, wage earners tend to live better lives as time goes on. And I would love to see a little bit of deflation on the regular. This inflation is a weapon that has just been used to very quietly destroy the working class in the United States. And so many of these problems, so much of this class warfare, and I mean, everything from incarceration rates to alcoholism and drug abuse and teen pregnancy. You could draw a dotted line to inflation and how it has destroyed people's lives for all of these issues, all of these problems. And if you fix the money, we can stop bickering about these problems and we can just get on with our lives. I really think fixing the money is the solution to this. And I don't think it's going to happen. I think powerful people want to destroy the money further. I really do, because they benefit from it. They tend to have a lot of assets. They tend to have a lot of debt. Inflation works to their advantage. It makes them wealthier. And, since 1971, the gap between the 1% and the rest of the percent has exploded. And that's not by accident. I think it's been by design. It's just good old-fashioned greed. Alexander, sir, thank you very much for the super chat, for supporting the channel. Thanks for the great content. That is my pleasure. Welcome. Thank you. By the way, real quick, I want to send a shout out to Mario over at Monaco64 and all the people who joined the channel this week. I did a guest spot on Monaco64. It was earlier this week. Had a fantastic time. Mario is a great guy. It was a pleasure to talk to him. And a lot of people came over from that channel. So thank you guys. Welcome. We do this every week, this live stream. I like it because it's two-way. It gives me a little time to interact with you guys directly, take your questions directly. And it's not just me on my soapbox talking at you. I like it this way. So we do this every Friday. Hopefully you guys can come and join. And welcome, and thank you guys for subscribing to the channel. I shall strive to make it worth your while. We do not wrestle with flesh and blood, but against the principalities, powers, and rulers of the darkness. My goodness, this is getting biblical. Spiritual hosts of wickedness. All right, we are quoting scripture there. That was profound, Mr. Simon. Thank you. Mike Robin, thank you, sir, for the super chat, for supporting the channel. Consider doing a special on how hyperinflation and a reissue of a new coin results in savings being diminished while personal debt remains the same. Interesting. While personal debt remains the same. Oh, I see what you're saying. Talking about the CBDC, if that's where you're heading with that, Mike, I think. That would be interesting. I would have to look into that one. I'd have to do a lot of research into that one about how personal debt remains the same. The mechanics of that I'd have to study a little bit. But thank you again for your continuing support for the channel, sir. I really appreciate it. Mr. Cheeseburger, sir. Dude, hyperinflation is inflation in a times of thousands. Do you think it could get that bad? If so, the USD is done. Cheeseburger, sir, thank you also for the super chat, for supporting the channel. You guys are awesome. Thank you very much for this. So I forget what the actual definition of hyperinflation is. I think it's something like 50% a month, like month over month, which, keep in mind, we are at 0.9% month over month right now, 6.2% year over year. So right now, the word hyperinflation gets thrown around an awful lot. We are a long way from hyperinflation. Okay, want to preface by saying that. Now, the thing about hyperinflation, nobody ever sees it coming, right? Nobody ever suspects it's the Spanish Inquisition. Hyperinflation comes out of the blue. By the time you realize it's hit you, it's already too late. And with the amount of money printing, it's something like 30 or 40% of all currency in existence has been printed in the last 2 years. And now that it's in the energy markets, and now that it's heading towards food markets, and now that these shortages are developing of everything, and again, we still have not even really seen the rent numbers reflected in the inflation. And then once you factor in the psychological element, and this is where hyperinflation is born, right? Inflation is a little more mechanical. It's a little more scientific. Increase the money supply, the price of goods goes up. Hyperinflation has that psychological element to it. Once people get scared, it creates that stampede. That's hyperinflation. Now, it's hard to say scientifically at this point on this rate on the 10-year, or if we print this much money, that's going to set on, right? It's hard to accurately predict when a panic is going to happen. If we could do that, we'd probably have better soccer stadiums and better concerts, right? Because we'd be able to more accurately predict the behavior of crowds and when people are just going to go crazy and trample each other to death. But that's what hyperinflation is monetarily. It's where people stampede for the excess to get out of their money at all costs, and they just buy anything and everything they can before the money becomes worthless, driving up the price of everything, driving down the value of the currency. It's a mass dumping of dollars. Now, for that to happen, we're a long way from that happening, okay? But inflation is becoming a household word now, right? It's most people, and you're going to see this at Thanksgiving, folks. I'm telling you, when you go to see your family for Thanksgiving or whatever whatever holiday is coming up soonest if you're not in the States. I know not everybody celebrates Thanksgiving. But that weird uncle is going to be talking about inflation. He's going to be talking about the 70s. And I did a video about NPR and this weird segment that they did kind of making fun of that creepy old man who's afraid of inflation. Everybody's going to hear about inflation around the dinner table over the next few months as we gather for the holidays, right? I'm telling you, you want to have fun? Do a shot every time you hear somebody say inflation at Thanksgiving dinner. You'll be toe up by the end of the night. Don't do that. I'm not advocating that behavior. That's irresponsible. Oh my God, I got to cover my butt. But once that psychological element kicks in, once that fear of the dollar losing its value really takes hold, people don't behave rationally when they're afraid. And that's when we could see that 50% in a month, meet the technical definition of hyperinflation. And, what we've seen it in the not too distant past. I mean, the inflation in Weimar Germany was far in excess of that. Prices were doubling overnight in Weimar Germany. And it was only 100 years ago. It was not even 100 years ago. I mean, to say that can't happen is just to beg for it to happen again. And Weimar Germany was not this little banana republic. It was an industrialized country. It was one of the bigger countries in the world at the time, one of the more powerful. I mean, there was the Treaty of Versailles, and there was all these other issues contributing to it. I understand that. But, yeah, I think we could see it. I do think we could see hyperinflation. I'm not going to handicap it. I'm not going to try to guess on a date or when it's going to happen or what the initiating event could be. But we definitely have all of the ingredients right now. We just maybe haven't mixed them enough. All right, a big deflation of purchasing power is coming, Patrick. Patrick, I don't know how to pronounce your name. Is it Gelke? I'm sorry. A big deflation of purchasing power. So you're talking, that would be inflation, I guess, is what you're saying. Sorry, I'm getting semantic here. I do think we have our inflation right now, and I do think we are looking at a deflationary market event sometime probably in the next year or two. Sometime between 2 and 3% on the 10-year. And then I do think the response of the government is going to be to print money like never before. And then I think we're heading towards hyperinflation coming out of that. So that's why I'm keeping cash on the side right now. That's why I want to be well positioned to buy myself assets that generate a return after that deflationary crash, but before the hyperinflation sets in, so that those assets will rise commensurate with the rate of inflation coming out of it. Because I'm trying to thread that needle between deflation and hyperinflation to position myself to be able to come out of this thing in one piece, because lives are destroyed in a hyperinflationary situation. Societies are driven mad by them. I'm trying not to be too fuddy here, so I'm going to cool it a little bit, but I do very much worry about that. Buy silver and gold, Rich Dyer. I am always buying silver and gold. I dollar cost average into them. By the way, I want to correct myself. In my video with Mario over at Monaco 64 this week, I mentioned that I do a 10 to 1 ounces of silver to ounces of gold ratio, and that was incorrect. I buy 100 to 1 silver to gold. I went back and I watched that full video, and I was like, I gave the wrong number. No, I buy 100 ounces of silver to every 1 ounce of gold. For now, I think the price should be closer to 10 to 1. But right now the price is about 70 to 1 silver to gold, because I think silver, first of all, I think gold is undervalued, and I think silver is grotesquely undervalued. So I buy about 100 ounces of silver for every 1 ounce of physical gold that I buy. Um, and I think eventually coming out of this, and I've talked about the shortage that I see coming as the China's construction market collapses, that the supply of silver is going to dry up, and I think we're going to see some kind of a return of silver where it will be priced somewhere closer to the natural ratio of 8 to 1 that it comes out of the ground. So for now, I'm overbuying on silver. I dollar cost average in. I'm not trying to time the market. I just buy a little bit at a time. Dumb Money Media, sir, thank you very much for your continued support of the channel. Schiller's Corner, where you shill your melons to the world. DMM will send you info on it. Yes, I am very much shilling my melon head to the world. Thank you, fellow melon head, Dumb Money Media, sir, for supporting the channel. Still waiting on that video for Evergrande. I'm looking forward to that one. My God, with everything going on in the press right now, it could be hilarious because we still don't know. I mean, that's the situation in Evergrande. That's going to be decided in court. Did they default? Didn't they? We've got this German firm that says we own the bonds and we haven't been paid. And then we've got the press saying, oh, yeah, this guy I know somewhere else who won't give us his name, he owns the bonds. He says he's been paid. So I don't know. But I do know that banks are incentivized right now to keep this hush-hush while they unload this crap. And they're desperately trying to unload it. Evergrande's debt is selling for like 25 cents on the dollar right now, along with all that other junk bond garbage in the Chinese high-yield bond market. Again, I've said this before, not financial advice, not a financial advisor. Do your own research and your own DD. But if you see somebody promising you a 25 or a 30% yield and they're claiming it's risk-free, run. There is no such thing as a risk-free 20% yield. Trust me. Nicole Post, hyperinflation requires both the psychological side you mentioned coupled with printing. The German central bank was printing so much they ran out of paper. That's right. And, you know, it's actually the one area of the German economy that was thriving where they were actually adding jobs was in actual money printing. Like being a money printer was the one job that they were still hiring for. They were trying to print their way out of the Treaty of Versailles requirements, which, you know, a lot of that led to ultimately causing World War II. But the whole country went insane. And hyperinflation drives people mad. Like, you know, when it's too expensive to eat, when your life savings is evaporating before you, it drives you nuts, and people start to do irrational things. And, you know, don't think that the mistakes we made in the last century can't happen again. I see us making a lot of them again here. And, you know, the country is in the process of rolling over. It's being taken over by people who have never lived through that kind of horror before, right? As the baby boomers are the kids of the people who had to clean up that mess. And as they retire and as they pass away, they're being replaced by the Gen Xers and the millennials who have never lived through this kind of horror before. And it's only something they've ever seen in those black and white videos where they mess with the speed and people walk funny and, you know, and there's the guy with the really strong British accent narrating. That's just stuff that happens in black and white. That doesn't really happen in the real world anymore. And that mentality is dangerous, folks, right? History absolutely can repeat itself. So got to be vigilant. And, you know, it starts with the money. I see it starting with the money. Societies go collectively insane when the money becomes worthless. It is dangerous. Anyways, let's shrink my melon head again. Now, I got a question in the post. Somebody was asking about M1 and M2 money supply and the difference between the two. So I wanted to bring up this chart. What did I just do to my chart? And as I was looking at this, you know, you asked me why I'm so worried about hyperinflation. Look at this chart going back to we'll go back to 1970 and the closing of the gold window when we went off the gold standard. All the money printing and all the quantitative easing and all the inflation since the 1970s, and even with the global financial crisis, is not even a blip on the chart compared to what we just did. Look at this. Now, this is the M1 money supply. M1 consists of all currency outside the U.S. Treasury, Federal Reserve banks, and various depository institutions, demand deposits at commercial banks, excluding all these other things. So basically, M1 is cash, okay, cash money. And if you look at what M1 money supply has done since we closed the gold window, and then all of a sudden what we just did and what we continue to do, right? You had that big vertical line. That was the pandemic there. Make sure you guys can see me. My melon's not in the way. It isn't. But look, even since the initial printing that lasted until June, look what we've continued to do since June. All right? We're still printing a lot of money, and we have not even begun to be done with printing money, right? We just announced the taper. The taper hasn't actually started. So this is going much higher over the course of the next year. That's scary. All right? I mean, most people don't really understand exactly how much money has just been created out of thin air. Now, there's the M2 money supply, or the M2SL, seasonally adjusted, because when the Fed doesn't get the statistics to say what they want them to say, they start to seasonally adjust things. But even the M2 money supply, again, just straight up, and then all of a sudden after these last few years. Now, the M2 money supply consists of basically all the cash, but then it also consists of things like CDs, money markets, basically near liquid assets. All right, so it's slightly more inclusive than the M1 money supply. Now, one thing I want to point out, I'm going to zoom in on an area here, and why I think this market crash is coming. I want to zoom in on 2018. Where's 2018? The end of 2018. Because in this whole chart, there was only, I think, 1 month. Was it M2 or M1? There was only 1 month where it actually went down. And I mean, it went down barely. No, it wasn't M2. It was an M1. I apologize. And it was right before the market freaked out in December of 2018. Here we go. This is Jerome Powell's quantitative tightening, unwinding the balance sheet in 2018. This is when we tried to reload the chamber, as Powell was saying. This is the M1 money supply, where he started to unwind the balance sheet a little bit, which is basically just taking money out of the economy. I don't know if you remember, but Donald Trump was on Twitter all the time, bad-mouthing Powell, saying, my economic numbers are so good, even though Jerome Powell is taking money out of my economy. What he meant was the Fed was actually engaged in a little bit of quantitative tightening. And by a little bit, I mean a very little bit. I mean, if you look at what M1 money supply did during that time, it just barely moved. It just barely moved in the downward direction. And overall, even over the course of that year, it still went up. And in November, the market freaked out. The market just freaked out in December, November of 2018. Dropped a few thousand points. And that's when Powell just abruptly started cutting rates again. And then, of course, we had the taper tantrum. Not the taper tantrum. We had the repo madness in September of 2019. And then the pandemic hit. And onward to all this ridiculous money printing. So that's why I really worry about hyperinflation, because I see charts like this. All right, that's obviously not a recipe for success, and I don't think we're done with this. I think after this deflationary market crash, even this big jump is going to seem small compared to what they do once they have the mandate they need. Once they say, look, we tried to tighten, we tried to raise rates, and you guys didn't like it, and you begged us to fix the problem. That's when people like Lael Brainerd are going to take over at the Fed, and this Amarova woman who they're trying to put, this outright communist that they're trying to put in front of the controller of the currency, the person who wants the Federal Reserve to swallow all private banks and basically give herself the ability to directly debit or delete your money from the account whenever she wants to. Again, that's a long way off, but that's her words, what she wants to do. So, yeah, I think hyperinflation is absolutely possible, folks. I really do. Cheeseburger, sir, thank you again for the support of the channel. Manarino says they aren't tapering, just that they lowered their minimum bond acquisition target, but there's no upper limit. Cheeseburger, you're right. I saw that, and Manarino is right. What they've been doing is they have been printing $120 billion a month, at least. That has been the number that they've been using. They have been printing most months more than 120 billion. So what they're doing is they're proposing this drawdown of, I think it was 10% a month or something like that, where the at least number is going to get smaller. That doesn't necessarily mean the actual amount they print is going to get smaller. We'll see in practice what that ends up looking like. But that is a good point, Cheese, that right now the number is 120 billion a month, but there is an asterisk of at least next to that. So that is the 120 billion a month is the minimum amount of QE that they're doing every month. They're only lowering the minimum. There's nothing forcing them to actually hold to that minimum. So theoretically, they could take the minimum amount all the way down to zero, and they could continue printing 130 billion, 140 billion a month. So, and there is no maximum. They'll never do that. They'll never put a limit on the amount of money they can print. They should, but they don't. So that's a good point, Cheeseburger. And by the way, I did watch Manarino on 2x speed, and it was hilarious. So many angries, as you put it. And I tried to watch myself on 2x. It was unwatchable. I couldn't stand it, especially because I tend to move in my chair a lot. So like I looked like I was on a boat in high seas when I watched myself at 2x. It was brought back nightmares of my days as a commercial fisherman. I didn't like it. So, anyways, I did like being a commercial fisherman. I always say that's the most fun I hope I never have again, was my days working on a fishing boat. But I like things on dry land now. I like things stable. What else we have? Will I need a wheelbarrow for a wallet, Cheeseburger? Not if we get our central bank digital currency. All you're going to need is the Fed-approved wallet, where they can watch everything you do, and they can say yes or no to every transaction you make. Or they could say, hey, your climate footprint is too high, so we're not going to let you buy this many gallons of gas this month. Not until you buy a more fuel-efficient vehicle. Go ahead, give the central bankers and the government that much control over your spending and see what they do. So, no, you won't need a wheelbarrow. You'll just need the government's permission to spend the money how they want you to spend it if these CBDCs ever become a real thing. My God, I hope they don't. Do you think we could see hyperinflation in consumables, milk, bread, gas, but deflation in financial assets, maybe real estate too, if rates go higher? That's interesting. I never gave a lot of thought to that. Nicole, you're on fire today. You've got a couple really good ones here. Thank you for these. I guess what we're talking about is a little bit of a stagflation environment, right? So, yeah, we could see that. We had maybe not at the same time, but I could see one leading to the other, right? Say it's 1975, right? We have inflation in gas and consumables and food, and everything is getting more expensive. And then the way we get out of that was, what's his name, Paul Volcker, with his draconian rate hikes that absolutely killed the real estate market a few months later. So I could see one leading to the other. I'm not sure both simultaneously. I'd really have to think about that one, if we could see that simultaneously. I mean, certainly in big tech stocks, like look at Rivian. I mean, $100 billion market cap for Rivian on day 2 of trading. Give me a break. They made 156 cars this year, folks. They're valued at almost $1 billion for every car they made. Right? If we get in any kind of inflationary trouble, those future earnings of Rivian are not going to be worth squat. So I think, yeah, we could see inflation or hyperinflation in consumables, and then maybe in terms of stocks, we could see those assets going down. It's hard to say in real estate, maybe in housing, because if we get big rate hikes to fight the inflation, that's going to kill housing prices because people won't be able to afford their mortgages. But you're also going to see a lot of people like Bill Gates buying up farmland and things like that, because during a hyperinflationary scenario, farmland is probably about the safest investment you can get, because farmland produces commodities that can rise with the inflation. So I think you'll probably see a lot of pricing support for farmland, for timberland, but residential real estate, I think, would get clobbered if the rate hikes went up too high. I don't know. That's just my take. I would love to buy myself a few hundred acres of farmland. I really hope I'm able to do that at some point. Thanks, Jack. What's your view on platinum? Patrick mentions. Patrick, platinum has been probably one of my losing trades from this year that I'm hoping is going to turn into a winning trade. I don't know if you've been following my channel, but I did a video about platinum. I think it was back in July, maybe even June, when the riots were hitting South Africa. And because the rioting in South Africa was right along this vital highway corridor where all of the PJM metals flow. South Africa produces like 80% of the platinum group metals. That's platinum, palladium, rhodium is mined in South Africa. And when this rioting hit South Africa, if it had gotten much worse, it would have caused irreparable damage to the infrastructure, the ports, and the mines where all of these metals are coming from. And basically, as soon as I made that video, the rioting stopped and the price of platinum went right back down. So I did buy PLTM, was an ETF that tracks the price of platinum when that story broke. I still hold it now. It's still down. It was down about 10-15% from where I bought it, but now it's only down 1% or 2% because platinum has recovered. And as palladium prices have gone so high, we're seeing a lot of the automotive demand for palladium is now going back to platinum, where I guess a lot of catalytic converters used to use platinum and then they started using palladium for whatever reason. And now palladium prices are so high, we're seeing a switch back to platinum for a lot of these catalytic converters. And I do not share the opinion that in the next 10 years, all cars on the road are going to become electric vehicles. I think that is pie in the sky, ridiculous optimism. The grid infrastructure required to support that does not exist. If we started building it now with every available resource, we would still struggle to put that many electric vehicles on the grid. So I don't think that's happening. So I think that the industrial and automotive demand for platinum and palladium is still safe, at least for the next decade or two. And also the big question with platinum, though, is the chip shortage going to get resolved? Because eventually the chip shortage, if we can't build cars, if we can't finish cars, then we're not going to need catalytic converters anymore. So the platinum market needs that chip shortage to get resolved at some point. Otherwise, if all the automakers shut down entirely, then demand for platinum is going to go down with that. So that's something that's out there. But I still hold PLTM. I bought it. My thesis for the trade never played out. The rioting in South Africa did not cause platinum prices to spike like I thought they would, but prices have almost recovered to that level now. I'm still holding it because it's a nice inflation hedge while I'm at it. But if I don't see the chip shortage start to end anytime soon, I'd probably be looking to get out of that trade, and I'd be more comfortable in a gold or a silver than that. I hope that makes sense. Cheeseburger, again, sir, thank you very much. Mannery says they just lowered their minimum. Oh, that's the same comment. Okay. Super chats block a bunch of words, so I have to type it all out, dumb. I'll send you some info on Twitter about the segment. You got it, Dumb Money Media. Thank you, sir. I didn't know super chats blocks words. That's interesting. What are ways for me to hedge my fiat to counteract hyperinflation? Invest in crypto? Question mark. All right, Wahoo. At risk of evoking the ire of a lot of the anti-crypto folks, I can tell you I am dollar cost averaging into Bitcoin. I buy a small amount of Bitcoin every week, regardless of what the price does. I started doing that in January of this year. I decided I'm not skilled enough to try to time cryptocurrency markets. So I just buy a little bit at a time, and that's been the best trade of the year for me. That and AMC have been fantastic trades this year. So I continue to do that. I also mine Ethereum. I don't have this big scaled up mining operation, right? I mine a couple dollars of Ethereum every day, but I'm investing in crypto that way. I have about a 10-to-1 Bitcoin to Ethereum allocation. I believe in crypto long term. Yes, I believe it's an inflation hedge, but I don't think it's just an inflation hedge because it's also very speculative, right? Gold and silver, those are your inflation hedges. That is a wealth preservation device, right? There's a lot of this argument back and forth between crypto or gold, or gold is no longer a thing because of Bitcoin. That makes no sense. All right, gold is all about stability. Gold is about preservation of wealth. Bitcoin is a speculative bet. Now, both Bitcoin and gold are fiat currency alternatives, but they live on two totally different sides of the investment spectrum. One is safe, the other is speculative. So I think there's room in a portfolio for both. I make room in my portfolio for both. I dollar cost average into gold, silver, Ethereum, and Bitcoin. All right. And I don't try to market time any of those things. I buy set amounts every month, every week. And I believe over time those things will play out because I think gold and silver are dramatically undervalued right now. I believe the markets are artificially suppressed, and I believe at some point the corrupt bullion banks that have suppressed the price of precious metals are going to lose control of it, or they'll buy enough for themselves that they'll allow the price to go where it really naturally wants to. And I also think that within the next 10 years, after the two Bitcoin halvings that remain in this decade, I think Bitcoin will be over $1 million by 2030. I've mentioned that a couple of times on my channel, and I stand by it right now. So I don't try to time the markets. I buy a little bit, every week, regardless, because I think 10 years from now, these day-to-day price swings, even between 60,000 and 30,000, they're not even going to show up on the chart. So that's my approach to crypto. I don't put all my eggs in that basket. I'm not a Bitcoin maxi. I don't think Bitcoin will ever replace gold. I don't think anything can ever replace gold, to be honest with you. Gold's been money for 4,000 years. That's not gonna stop because some guy wrote some pretty good code, right? And Satoshi did write some fantastic code, and it's amazing, and it's gonna change the world. And the corrupt central bankers are threatened by it, and that's why they want it to fail, and they're going to try to regulate it out of existence. They'll fail, but just because that came out doesn't change 4,000 years of history. Gold will always be gold. Really valuable content. Thank you so much for sharing. Thank you, Lucky Rips, for the kind words. Keep digging into Cardano for their Africa ventures. Dumb money. I know I owe you that one. I haven't looked into it. They're going to blow up there, and we're going to make some tasty gains. We go into Sizzler. Maybe a little Red Lobster. See if we have time. The one thing I have mentioned before, I haven't looked into the Africa story with Cardano, but I have mentioned that Ethereum is going proof of stake, I believe, in June of next year now. And when Ethereum goes proof of stake, that is going to be ESG competition for Cardano. So just keep that in mind. Cardano, the big thing in my limited understanding, because I don't follow Cardano very closely, but in my understanding, the best thing Cardano has going for it is that it's proof of stake. It doesn't have the energy input cost that Bitcoin and Ethereum have right now. And because of that, the ESG investors, who are they're very conscious of the carbon footprint of their coins, they like Cardano for that reason. And there's a lot of money in that ESG crowd, all right? I do not subscribe to ESG. I think ESG is partially to blame for what's going to happen to food prices next year, because they've choked off the flow of capital into fossil fuels. And like it or not, we still need fossil fuels to eat and to survive winter. But ESG is a very powerful force in the investment world, and ignore it at your peril. So, I think you just have to watch the Bitcoin price over the next month. Inflation will become very visible there. Even the SEC prevents companies from investing in spot ETF for now. I agree. The next month is going to be pivotal. And the other thing I have to mention when it comes to crypto and with Bitcoin is you can't ignore that Tether story. Okay, the entire crypto market could lose 80% overnight if it turns out that Tether lost its peg and that it was a scam and they weren't really backed up one for one by US dollars. All right, and Tether has some exposure to this Chinese commercial paper. We don't know how much, okay, but we know Tether has about $30 billion worth of commercial paper. And we do know that none of it is from the United States. So where else in the world can you get $30 billion of commercial paper? China. All right, so Tether has some exposure to China. We don't know how much. And when things finally pop in China, and they will pop, something is going to happen to Tether. We don't know what. All right, but if things get really bad, and look, when it looked like Evergrande had officially defaulted on Tuesday or Wednesday, which we thought was the story, it may end up have been the story. Look at what the whole crypto space did Wednesday night. That was people worried about Tether. That was people starting to sell just in case the Evergrande story took Tether down. I think that's what that sell-off was Wednesday night. And its prices still haven't recovered to those Wednesday values. So if you're going to invest in any cryptocurrency, you must understand the Tether story. And you need to go into cryptocurrency acknowledging that risk. Again, not investment advice. I'm not a financial advisor. Do your own research, your own DD. Arrive at decisions right for you based on your unique situation. I said that fast. But my belief is 10 years from now, it won't matter. So I invest in Bitcoin because I think regardless of whether Tether pops today or 2 years from now or never, I think Bitcoin will be over $1 million by the end of this decade. Okay. Just my opinion, folks. Tether will tank crypto, says Rich Dyer. I think that is very possible, but I think crypto will survive it. Okay. And also keep in mind, when I said Bitcoin could sell off 80% overnight, Bitcoin could go up 300 or 400% before that happens. Okay. So if you're sitting around waiting for Tether to crash the market to get in, you may still be getting in at a higher price than right now. Case in point, I sold all of my cryptocurrency in 2018 when I saw the Carlos from New York with his BitConnect video. You guys remember the BitConnect Ponzi scam? When I saw that video, I realized, oh my God, this is a scam. Cryptocurrency is deliberately targeting the poor and minorities. This story is going to be big. People are going to go to jail. And I sold all my Bitcoin and all my Ethereum back in 2018, and I was right. I got out around 13,000 in Bitcoin, and BitConnect ended up being a Ponzi scheme, and the price crashed all the way down to like $3,000. The thing is, I didn't start buying Bitcoin again until Bitcoin was $23,000. So while I did call that collapse in BitConnect, that still was not a good trade for me. I got out before the crash, but the price was higher by the time I got back in. If I had just left it in place right now, I would be a whole corner. I would be loaded. I would be stupid loaded right now if I had just not done that. So that's why I saw that happen, and I zoomed out on the chart, and I said, you know what? I'm not going to be able to time crypto, so I'm just going to dollar cost average in. I'm going to let this magnificent chart play out over the next 10 years and see what it gets me. So, we'll come back 10 years from now when I have 50 million subscribers to my YouTube channel, and we'll talk about whether or not Bitcoin was $1 million or not, and why, and what I did right or what I did wrong. So hopefully you guys will still be with me for that. Anyways, guys, it is now 4:36. I have gone on way too long today, but the comments have just been so good. Thank you guys for keeping me on my toes, making me think on the fly here. Some really challenging some really challenging questions today. I want to thank all you guys who sent me links and sent me information over the week. You guys are awesome. Like, I feel like I have this network of people that are sending me stories right now that I'm getting the most up-to-date information, and it's coming to me. I don't even have to seek it out. So it's really an asset to this channel. So thank you, everybody who's doing that. You guys who are tagging me on Twitter or sending me links. It's really awesome. Please keep doing that. Please keep the comments coming. I really appreciate you guys. I really appreciate your support for the channel. Thank you to everybody who sent me the super chats today again. All right, guys, we're going to call it there. I want you guys to have a good weekend. And in the meantime, live